Good afternoon. Thank you for joining us for this webinar on the New York Forward Loan Fund. Your host today is the Pace University Small Business Development Center, and joining us is Center Director Andrew Flam. And with that, Andrew, I will turn things over to you to talk about the SBDC and to introduce our panel.
Great. Thanks so much. Appreciate it, Renee. So good afternoon. As my colleague Renee mentioned, my name is Andrew Flam. I'm the director of the Small Business Development Center at Pace University, and welcome you to what I think is going to be really an engaging panel and hopefully a very helpful discussion for you all. I expect we'll have participants today from both small business owners, representatives from nonprofit organizations, as well as small landlords. So we're very fortunate in that New York State has launched the New York Forward Loan Fund program, which is beneficial and provides really extraordinarily important and low-cost financing to groups, all three groups. So we'll touch on and kind of learn more about those programs today. First off, so I want to give you a little bit of background in terms of who we are and what we do, and hopefully how we can give help. Again, I'm the head of the Small Business Development Center at Pace University. We're based in Lower Manhattan, and one of 22 centers throughout New York State offering no-cost assistance to entrepreneurs looking to either expand or launch their small business venture. We're all staffed by a team of dedicated and extraordinarily talented business advisors. These are full-time folks that work one-on-one on a day-in and day-out basis, helping entrepreneurs with a variety of issue areas and kind of challenges that they may be coming across. Clearly a big ticket item right now is recovery from and being able to kind of adapt to the economic and operational challenges that we're all facing as a result of COVID. So the short answer is, I guess we're here to help in terms of one-on-one assistance. I'm going to go over a couple of items I stuck in the chat in a moment, but just to let you know that we do offer, like I said, both kind of one-on-one assistance as well as hosting a wide range of webinars and other training programs to help you build and grow your business here in New York State. We also have access to some very impactful and terrific market research. So if you're looking for business development opportunities, kind of ways to be able to shape some of your outreach efforts and kind of quantify market data, again, we kind of do that for you, offered at no cost, for all SBDC clients. So there's a couple of quick things I just wanted to leave with you. First off, again, kind of the one-on-one sessions that are available during COVID, they are happening virtually. So would encourage you to connect with us or one of my colleagues from throughout the state to sort of see what issue areas we can help with. Obviously, access to finance is what we're talking about today. But some of the other key issue areas that we do address include developing marketing strategies, implementing and growing your social media presence and website, their sales strategies, operational challenges that may be coming up, MWBE certification, which is obviously a great opportunity for a wide range of businesses and other procurement opportunities. So if any of these issue areas kind of strike a chord and you feel like you want to be able to address them and tackle them in a one-on-one way, please do connect. There's the link in the chat there in terms of how to connect with a business advisor from our network. Again, this is all offered at no cost. Today's session is one of a wide range of webinars and other training programs that our center and my colleagues from throughout the state do offer. They're all offered to you at no cost. So if you're interested in finding out more about other available sessions that are coming up, I have also included a link in the chat in terms of upcoming events that are coming on a wide range. And finally, I did want to also talk about, I guess, in addition to the New York Forward Loan Fund, which is great, important, obviously the topic of the day. Our center is also tracking a wide range of financing programs, marketing ad credits, and grant programs in the private sector, and other prospective resources that may be helpful for your business as you're looking to revamp and find affordable and accessible financing as you're kind of addressing all the challenges that are coming from COVID. So I did include a link in the chat to our website that has a running tab of kind of what those programs are and an email address as to how to reach us. So if we can get help to you, we'd be more than happy to. So with that, I'll kind of stop the background in terms of kind of the programming as to how that all comes together. But we have a number of speakers today. And to kick things off, I wanted to turn it over to my colleague with Empire State Development, Beverly Bob. She is the Senior Director of Capital Access and the Small Business and Technology Development area of Empire State Development, or ESD. We will also be joined today, I think we're going to be sort of doing it sequentially, and we'll also be joined today by Brian Gursky, who's the Vice President of Strategy and Innovation at TruFund Financial Services. So Brian will be joining us today as well. And then finally, or I guess in no particular order, I suppose, we will also be joined by Casey Noel, who is the Assistant Vice President for Lending Initiatives with the Community Preservation Corp. So I think we'll start with Beverly, and then we're going to do discussions. Each of the speakers will have an opportunity to kind of talk a bit about programming, how they can be of help to your business, and then we'll open it up and we'll do some moderated discussion and answer some questions that you all may have after those initial remarks. So Beverly, I will turn the floor over to you.
Thank you, Andrew. Good afternoon, everyone. Andrew, just want to say we really appreciate your support in helping us promote this amazing resource. So thank you, everyone, for joining today's interactive panel discussion on the New York Forward Loan Fund, which is a new economic recovery loan program that's aimed at supporting New York small businesses, nonprofits, and small landlords as they reopen after COVID-19 outbreak and New York State on pause. In today's presentation, I'll go over some general information about the product, and I'll also walk you through the 16 pre-application questions that will better prepare you, the potential borrowers, to utilize this product. So as Andrew said, my name is Beverly Bob. I am with Empire State Development. Empire State Development is New York State's chief economic development agency, and I'm based out of the New York City office. So with that said, we'll get started. Next slide, please. The New York Forward Loan Fund targets small businesses and nonprofits with 20 or fewer full-time employees and small landlords that have seen loss of rental income. The working capital loans of up to $100,000 are timed to support businesses and organizations as they proceed to reopen and have upfront expenses to comply with guidelines under the New York Forward Plan. Potential borrowers can use the funds to pay for personal protection equipment. They can use the funds to modify their space to allow their customers and also their employees to return and feel safe. They can use it to pay rent. The loans are not forgivable in whole or in part. Refinancing of an existing loan is not permitted under the program. If you've received a Paycheck Protection Program loan greater than $50,000, then you will not be eligible to participate in this program. If you receive the EIDL loan, then you will also not be eligible. But if you receive the EIDL grant of $10,000, then you can definitely participate in the program. At least 60% of the loans will be made to minority and women-owned businesses. And I just want to state that even though this is a program that's generated by New York State, you do not have to be a certified MWBE to participate in the program. Thank you. Next slide. So I just want to go over the loan terms. Let's talk about amount. As I said, the loans of up to $100,000 are available to small businesses, nonprofits, or landlords. I just want to spend some time to talk about the amounts that you can actually borrow. So small businesses can seek loan amounts in the lesser of $100,000 or up to their average monthly revenue for a 3-month period prior to the COVID-19 outbreak. This can be any 3-month period in 2019 or first quarter 2020. Nonprofits, they can also seek $100,000, the lesser of the $100,000 or their average monthly expenses for a 3-month period prior to the COVID-19 outbreak, or first quarter 2020. And the reason why we have such a wide range for 2019, we want to cater to businesses that are seasonal. If you see an uptick in revenue in the summer months or an uptick in the winter months, you can definitely use that quarter to kind of gauge what your appropriate loan amount could be. And for small landlords, it's the lesser of the $100,000 or the projected reduction in your 3-month net operating income. Next slide, please. Interest rates. For small businesses and small landlords, the interest rate is 3%. Nonprofits, 2%. The terms of the loan, again, it's 5 years. The first year is interest payments only, monthly. The remaining 4 years would be interest plus principal, also paid monthly. I talked before about the use of funds. I just want to specify that if you're planning on using this money to refinance an existing loan, that will not be an allowable expense. But again, it is working capital. You can use the funds for inventory, marketing, rent, supplies, emergency maintenance. There's no application fee. There is a late fee that will be assessed for missed payments. The borrower will be able to repay the loan early without a penalty, and there's no collateral required. Next slide, please. So if you're interested in applying, I just want to walk you through the steps on what you need to do. First off, we would suggest that you visit www.nyloanfund.com. The loans they're not a first come, first served loan program. The applications will be reviewed on a rolling basis. There are 5 CDFIs that are accepting applications. Once you go through the portal, answer the 16 questions, the portal will help pair you with a CDFI that best meets your criteria. So for small businesses, you have a selection of 4 CDFIs that you can work with. Action East, which is now known as Ascendus, National Development Council, Pursuit, and TruFund. For nonprofits, National Development Council and TruFund. And for small landlords, you will be working solely with Community Preservation Corporation, CPC. On the right side of your screen, there's a quick snapshot of what that page would look like, and you'll be able to find general information about the program. There's an FAQ page, and at the bottom section of the page in the middle, that orange button, it allows you to apply. So once you click on that button, it will lead you to the questions. Next slide, please. So again, that website is www.nyloanfund.com. You'll start the pre-application questions, and I'll just run through the 16 questions relatively briefly. Next slide. The first question is, how much do you want to borrow? At the beginning of my presentation, I spoke about the amount that small businesses, nonprofits, and small landlords are able to borrow. Again, small businesses, you will focus on your monthly revenue. The nonprofits, you will focus on your monthly expenses. And for small landlords, it will be the reduction in income. Next slide, please. How do you plan on using the loan? Again, it's a working capital loan, so please select working capital. If you're planning on using the funds to acquire a business, purchase a building, sorry, this is not the fund for you, but again, it's working capital. So make sure you select working capital. Next slide. When do you need the financing by? Select the time frame that works well for you and your business needs. Next slide. So tell us a little bit about your business. Question number 4, you'll be able to provide us information about your business, the industry that you're in, and your years in business. The applicants must be in operation for at least 1 year from the date of the application in order to be eligible. For landlords, you will be selecting landlord as your industry. Next slide, please. Where is your business located? The applicants must be located in the state of New York in order to participate in the program. For small landlords, your building must be in the state of New York. So this question 5, you're basically providing us with your address. Next question, slide. How should we reach you? Please provide the contact information from a business standpoint. You'll be providing information for anyone with 20% stake or greater in the company. For nonprofits, you'll be providing that information from your executive team members. And we also ask that you monitor that channel. There are times that our lenders will send out emails to this contact number and email, and for some reason it ends up in the spam section. Next slide, please. What is your total revenue last year? For small businesses, the maximum gross annual revenue is $3 million. For nonprofit, your annual operating budget cannot exceed $3 million. Next slide. Did you earn a profit last year? Yes or no? Next slide, please. What was that? What was your net profit last year? You'll enter in a dollar amount. Next slide. Question number 10, you'll be providing us more information about your business. For small businesses and nonprofits, you will provide us information on your full-time employees. In order to be eligible again for the program, nonprofits and small businesses, they have to employ 20 or fewer full-time equivalent employees. Keep in mind that 2 part-time employees will be equivalent to 1 full-time. For small landlords, you'll be providing us with information on the amount of units. When my colleague Casey is up and he's speaking, he will address the criteria for units when it comes to small landlords. So I'll let Casey speak to that. We'll move on to the next slide, please. Do you have collateral for the loan? Collateral is not required, but if you do have collateral, please check all boxes that apply. Next question. Question number 12, how much revenue do you expect to make this year? Check what estimated amount you think will reflect your revenue for the year. Next slide. Do you have a business plan? A business plan is not required, but if you do have a business plan, it does help the lender kind of understand your business a bit better. So for this question, it's just simple yes or no. Next one, please. Question 14, is your business owned by a woman, person of color, veterans, and or LGBTQ identifying people? For small businesses and small landlords, you'll be answering this for owners with 20% stake, 20% or greater stake in the company. For nonprofits, you'll be answering this question for your executive team. If the response is no, you'll proceed to question 16. If your response is yes, you'll proceed to question 15. Next slide. And you're pretty much checking all that applies in question 15. The next slide, please. Question 16, which is the final question for the pre-application, you'll be providing us information on your credit score. Nonprofits are not subjected to this credit score process, but again, small businesses and small landlords are. So once you're done, you hit that orange button on the bottom that says done, and it'll lead you to the next slide, please. So based on the your responses, you, the potential borrower, would be matched with a list of lenders. As I said, there are 5 lenders. We've outlined the lenders at the top of my presentation. This particular individual is lined up with Acción, which is now Ascendis, Pursuit, and of course TruFund. The parameters of the loan are all the same. The rate is the same, the loan terms are the same, so it's up to the potential borrower to just make that decision as to what CDFI would they choose to work with. You know, there's a little detail button that's under the connect, that orange connect button there. It may provide you with a snapshot of the actual CDFI if you want to do your research. Let's say you heard Brian speak today and you were lucky enough to pair up with him and you decided you wanted to work with him, or maybe you wanted to work with Pursuit. So if you have the option of selecting a CDFI, definitely do your research and just go with the one that you think best fits. Once you hit connect, you'll lead to that next slide, which is an email indicating that they've confirmed your selection. On this particular slide, apparently this potential borrower has selected Acción, again, which is now Ascendis. So monitor your email, the contact email that you put in when you prepared your pre-application question, because it does tend to go into your spam. So now that you have this confirmation that you have been paired with Acción, they've accepted it, the lender will be reaching out to you to talk about preparing your application. So that kind of concludes my portion of the discussion. As I said, I kind of onboarded you on the product, New York Forward Loan Fund, the details, and I also talked to you briefly about the 16 questions that you'll have to answer in order to be paired up with the CDFIs. And from that, I'll let Brian talk about his process. Thank you.
All right, well, good afternoon, everybody, and thank you all very much for having TruFund as a part of today's presentation to discuss the New York Forward Loan Fund. I'm going to go through what happens after you've submitted your pre-application through nyloanfund.com, which is what Beverly had just walked us through. So TruFund, as Beverly had mentioned, is one of 5 partnering community development financial institutions that are working with the Empire State Development on this program. So what we will see once you get your application submitted to, let's pretend you had gone forward with TruFund, is we would get a notification that you have entered our queue. Would you be able to advance the slide once? Thank you very much, Renee. So TruFund is a CDFI. That's what all 5 partners of this program are. That's the type of organization we have. We are all nonprofits. We are all certified by the U.S. Department of Treasury. And TruFund's organization is a CDFI that's based in New York City, but we do work all around the state and as well as Alabama, Louisiana, and Texas. So our mission is to help historically disadvantaged communities and individuals create thriving and resilient small businesses and entrepreneurial ecosystems in order to close racial and economic disparities and ensure an inclusive and equitable society. So obviously with the things that are important to our organization, we're very aligned with what the New York Forward Loan Fund is intended to do. Next slide, please. All right, so I think there's maybe some animation in there. Renee, you could probably just go ahead and click down all the way through. Now, once you are in the queue for TruFund, we will be reaching out to you usually within a week to 2 weeks. And we've been getting to our borrowers pretty quickly who come into our pipelines, and I think that's true of all the participating CDFIs. So the things that I'm going to discuss here are pretty similar to all CDFIs. I certainly represent TruFund on this call, but all the CDFIs are operating this program in a fairly uniform way. Casey with CPC will be speaking specific to small landlords, but I will be representing what all CDFIs are doing for small businesses and what we are doing for nonprofits. So make sure that as you're applying to this process, you are ready to go with your documents. And so the documents that TruFund is requesting are the 2019 tax returns. If you had been in business and operation in 2018, we would want your 2018 tax returns as well. And so that is something you will be submitting to us, and also year-to-date income statement for 2020, if it is available. That helps us. It helps us understand what the current situation of your business is. It helps us to understand what the first few months of the year were like for your business. So if you have that available, then we will request that too. But our basic requirement is the 2019 and the 2018 tax return. Legal formation documents. This would depend on what kind of legal structure you have. If you're a sole proprietor, we would want to see that you have a business certificate. If you are an LLC, we would want to see your articles of incorporation and your operating agreement if you have another member with you. If you're a corporation, that would include your certificate of incorporation and your corporate bylaws. These are what I just listed there are your routine legal formation documents that we do need to have for your business. And that is, again, something that is uniform for all CDFIs. I'm just kind of holding on this one document here because sometimes that could take a business owner a little bit of time to go get what's necessary. They may not have had an operating agreement. If they had another member in their LLC, they may be a sole proprietor and operating as an independent contractor, but they just had not gotten a a business certificate. So we work with you to explain what these documents are. We will, of course, guide you to resources of where and how you can attain documents if you don't have them, but it's also just helping you to understand that these are needed. And the quicker you could provide these, the faster that we could move in getting you the capital through this program. I'm also going to add here that there's bank statements that are from February 2020 to date, and then finally a copy of your photo ID. Next slide. All right, so here are all the steps that each of the 5 participating CDFIs are pretty much taking. So once again, this is what TruFund is doing, but please understand that we're all operating this program in a fairly uniform way. So Beverly had walked you through how you submit a pre-application through NewYorkLoanFund.com. It's very helpful to see those specific questions to help you realize it's a very accessible program. Just putting in that data there. Once you come to a lender, then we go a next step deeper. So we will be in touch with you in 1 to 2 weeks. At the time that we do reach out to you by email and phone, we will verify your eligibility to indeed go forward into a full application. And if you're able to move forward, we'll send you the full application. You'll be reminded of the document list and anything particular that we might need for your business. But the full application document list is what you're provided at that time. We will complete, we will help you complete that application. There's, you may be applying for this capital because of an emergency circumstance, not necessarily because you had been planning to get a loan. So we realized that businesses were caught flat-footed by this unprecedented situation. We realized you're going to need some additional time and support and explanation to get through this, and we're here to help you. So we will help you get through the application, understand the required documents. And from the time that a full application required documents are submitted and the underwriting and the closing process happens, that could usually be 1 to 2 weeks. We just had one closed yesterday, on Friday, that was within a 5-day week. The business owner had everything for the application right away, submitted it. We did some things with them on the phone with them to be able to help them through the process. They provided their documents and we were able to close within the week. So our goal is to get you this money as quick as possible. So if you're prepared, we can move quickly. Next slide, please. So suggestions here. I'm sharing a few common challenges that businesses may have or some questions that come up here. And the first point is that suggestions for a successful loan application process is be sure the financial statements are complete and accurate. This is very important for nonprofits that may be on the call today. If you don't have a 2019 990, we will accept your internally prepared financial statements for your nonprofit. But please make sure that those are complete, that you're able to answer questions about the financial activity of the business. For small businesses, for-profit businesses, again, please make sure that you do have your 2018 and your 2019 tax returns if you're in operation in 2018. Now, be prepared to answer questions about your organization's finances. We'll follow up with you as a lender. We really, recognize the fact that this is emergency capital to help your business sustain and recover from New York forward, but it is a loan. This is a loan that you'll have to repay back. It's a 5-year term. As Beverly had explained, the first year is interest-only payments, but TruFund and all the lenders a part of this really want to make sure we're a part of a responsible process here. So, we may ask you questions to explain your sources of revenue. Do you experience any seasonality in your business? It can help us understand what 3-month period of the year to base the cap amount that you'd be eligible for. Are there any unusual or one-time expenses in your past financials that we should be aware of that might help us to get a better sense of what's your normal operating net income from your business? When you do submit your taxes to us, we do add back in the non-cash expenses like depreciation or any loan losses that happened in the past that are amortized over time. So, these are things that we're going to be asking you about and wanting to learn more about. We'll work with you on this. Be prepared to explain the impact that COVID pandemic had on your business. You do not need to provide financial proof of that or evidence of that, but we do need to understand through a supplemental application form we have just a short narrative of how was your business impacted by NYS on pause or the pandemic. Also be prepared to itemize the use of your loan. It's very helpful for us to understand what's going to payroll, what's going to back rent, what's going to help you with your operating expenses going forward. This really becomes a part of the way we understand the impact that this loan is going to have in the business, as well as to really make sure that it's aligned in a way that's going to be most helpful to your business. And finally, understand that loan amounts are ultimately determined by an assessment of your ability to support loan repayments. Beverly told you the max amount, if it's supported, is $100,000. She also explained too that it is 3 months worth of your revenue, an average revenue over a 3-month period, or for nonprofit, your expenses. But that's just telling you the cap you could apply for, the limit you could apply for. All of our lenders are looking at your actual cash flow through your net income and your tax returns to really make sure what loan amount you could actually support. So please understand that that's going to be some discussions we're going to have, and we're going to learn really what's going to be the amount that we can get to you. But understand that those are just caps. Okay, next slide, please. And I think that actually might be it. But I wanted to just go through those few points from a lender's perspective, some of the common issues and questions that we are working with business owners on. So we certainly look forward to answering any of the questions after this. And that's my contact information when participating.
Thank you to Andrew, as well as Renee and Beverly and Brian, especially for doing all the heavy lifting so far on this call, because now I can just say, for the most part, just listen to what Beverly and Brian said, and it's the same for CPC. And of course, having said that, there are some marked and specific challenges and opportunities that small landlords throughout the state of New York have been facing based on the pandemic. And so what we did at CPC was we decided it was time for us to partner with the state and our fellow CDFIs to try to provide extra relief for some of our small landlords across the state. As a way of background, CPC has been in the business of being a financial lender to landlords, developers in the real estate sector since 1974. I think over that time period, between 1974 and now, we've, I think, financed approximately or lent out approximately $11 billion and been helpful, I think, in many communities throughout the state, not just here in New York City, but upstate as well. So we saw this as a unique challenge. I think when we started back in April and May, we were very hopeful and slightly naive in thinking that it would be a short-term solution. And we've seen and we've all experienced that this is something that has really made 2020 one of the most challenging years for New Yorkers and for Americans. So to that end, we have modified to some degree how we've approached the New York Forward Loan Fund and how we do it on the landlord side. So we wanted to just take you through very quickly across the next 2 slides how we approach folks who are in need of this kind of relief. And I'll start with how we define the intended borrower. We're looking at small property owners, and the way we think about that is, especially from a New York City perspective, a small property owner in New York City is anyone who has less than 200 units up for rent. And when we talk about units, we're really specifically talking about residential units. We understand that there's also a great need for commercial landlords who have small businesses in their buildings to provide support for them. At CPC, we specialize in residential lending, so we are focusing our efforts to small property owners of residential units. So if you have throughout your portfolio less than 200 units, then you can apply to the New York Forward Loan Program, and we'll try our best to make you a loan under the eligibility parameters. Additionally, we want to make sure that any one building out of your portfolio is no larger than 50 units. So just to be clear, 200 residential units across your portfolio, and no one building larger than 50 units. And we'll get into this next bullet point a little bit later, but the idea is we're really trying to make sure that this relief is going to low and moderate income census tracts or properties that have average median income rents at 100%. There are a number of eligibility requirements in addition to that. When you do the pre-application and then come to our CPC full application for the New York Forward Loan Program, we want to make sure that you can demonstrate that for the past 12 months, your business, your properties have had a positive cash flow prior to COVID-19, the onset of it. We want to make sure that your mortgage is either current or you're part of a forbearance agreement, and that is something that you can easily get from your current lender and provide to us, and then we can continue the process of making sure your application is eligible. We want to also make sure that prior to COVID, you were current on your taxes. And again, that's a simple statement that you can get from your local municipality, indicating that your taxes have been paid on the properties that you're applying as part of the program. In addition to it, we want to make sure that the rent roll that you provide actually shows which of your current tenants are either paying or in the non-paying category due to COVID-19. And I think at some point we will, I'll make sure to try to take you through an example of that. In general, we understand that, as Brian was indicating, this is an emergency situation and you're trying to get help. So a simple statement in the form of a hardship letter stating that I'm a landlord, I have tenants that are either not as fully employed or have completely lost their jobs. So we want to make sure that that statement is represented in a simple statement or letter. As part of taking the New York Forward loan funds as a small landlord, you're also agreeing to not evict the tenants who are suffering from the COVID-19 impact. So for the period of the loan, and in our case, it's going to be a 6-month period, you're also indicating that you're not just relieving yourself, but you're also passing on that relief to your tenants by not evicting them. In New York City, across New York State, it's really imperative that we're not making a loan to a property that prior to COVID-19 had kind of like health and safety issues. So the building that you're applying, the properties that you're applying for New York Forward Loan, we want to make sure that those buildings are in good physical condition and that they do not have any life safety violations that have not been cured to date. So I think I've exhausted this slide. And so the next slide kind of begins to take you through some of the terms. Beverly and Brian, again, they've done a great job of taking you through some of the terms of the New York Forward Loan Fund program in general. I think if you kind of look at the bottom half of the terms, the max loan amount is still the same. On the landlord side, it is still a max of $100,000. The only difference is that when we look at the rental income loss due to COVID-19 and non-paying renters and tenants, we're looking at a 6-month period. We initially started looking at a 3-month period, but that was more than 6 months ago now. So we made a modification and we made sure that we could hopefully help people for a longer period of time. So the loan amount that was determined, we multiply that by 6, but we also keep it still under 100,000. And what this loan can be used for, Beverly did a great job outlining it. So that's, I think, pretty clear. I think the overarching point of us lending a hand is to make sure that we understand, since we're a lender, and we understand that our borrowers need help paying their mortgages, and that is the main the main point of this. So if we can provide through the New York Forward Loan Fund a mechanism so that the folks who own these properties, they get the help they need, and then the renters don't feel like they are just on the precipice of being evicted. And that's our main goal. And it's something that we hold near and dear because we like to do as much affordable housing in the New York State as possible. So I think that's it from me. And I think I'll tease out more of the details in the Q&A period.
Awesome. So I think what we'll do is I have a couple kind of pre-prepared questions that I think would be useful in terms of fleshing things out. But Renee, as we have, if there are questions in the chat as well, I'm happy to kind of dial back or whatever. But I think maybe just to kick things off, I'll start. I know that I guess as part of the program intent that Beverly in particular laid out was looking at New York Forward Loan Fund as a way to kind of help address challenges that specifically have come about as a result of COVID-19. And I guess maybe this question for Brian and for Casey, if each of you can kind of lay out briefly if there are specific things in addition to kind of the financial documents and others that you've referenced that would be relevant for folks to kind of include in their either the pre-application or in the application to be able to document or demonstrate the economic hardship.
As a residential lender, we normally have about 25 different documents that, in addition to an application, a full application, that we go through to really underwrite the lendability of our potential customer. And so what we've done for New York Forward specifically is really try to streamline that down to about 8 to 9 documents. And I've talked about most of them. None of them will be a surprise to seasoned landlords. I think one of the things that we've experienced throughout the state is when we reach out to smaller landlords who have gone through the steps to, have a good property, be good to their tenants, take out a small mortgage. I think something like this is a little bit more far afield for them. And one of the challenges that we've seen is that collecting all the documents, similar to what Brian was saying before, collecting all the documents to be ready to submit a full application. I think that's been the part where we've had to do a little bit more technical assistance many times over. And so typically, we're lending on, CPC is lending on to about maybe 50 different folks in a year. And now we're looking at 900 applications in a 5-month period, give or take. And so having the ability to reach out and really guide folks through has been the part that's been the trickiest. And it's a real world scenario at a real world pace. And if I were a small landlord applying for New York Forward, also trying to figure out whether my kids are in school or they're out of school, whether they're back in college or not, I'm working from home. It's a lot to process all at once. And I think that's the part where we try to do as much as possible to guide them through and help them figure out which documents they have and which documents they need. But I think that's the crux of it. That's the kind of the secret sauce that's hard to apply, because we want to make sure that the folks who are eligible can get the funds as quickly as possible. But there does need to be a sufficient amount of documentation to make that happen. And I think that's we wish we had 20 times more people working with us to get to everyone who's eligible. And I think that's been the challenge that makes it really crucial for everyone when they're doing the pre-application, when they get our full application, to really take the time to look through everything and just highlight and circle which things they don't have or they've never even heard of. If when I say rent roll, someone's like, I don't know what that is, that's totally fine. Throughout the process, we'll make it possible for the folks that work at CPC and who partner with us to really get a sense of what that means. And yes, it's something you have. It might be written down. It may not be an Excel spreadsheet, but it's something that at some point in some way, relatively soon, you can get to us so that we can get you the right loan amount.
I think what Casey shared is right on. The just specifically though, the documents I think we've had some issue with is just really around business formation documents. And those are things that a business owner is not necessarily kind of pulling out of the drawer on a daily basis. So that can take a little bit of time, and we understand that. The other thing too is really just helping business owners understand how the loan is ultimately determined, and trying to find amount that's really going to be helpful to you. And I think that this, is a presentation here today on how to go through the transaction of the New York Forward Loan Fund. But a preceding step to all this is I would really recommend for anyone thinking of going after this or any other emergency loan fund is to really know how much you need. To not just kind of go for what amount is available, but really understand, what is it that's going to bring your business current, what's going to help you maintain through a foreseeable period of time, which may only be a few weeks to a month ahead, and what might be additional amounts that you might need beyond this, with all the uncertainty here. So, I think, as a business owner, you really need to come into any of these programs knowing what your number is. The other thing that I think is just helpful to share here, and that's really to almost emphasize what Casey was already talking about the importance of moving as quick as you can on this process. And Casey was just highlighting, I think, very usefully, the fact that we have so much on our plate, and business owners are really having to contend with probably just daily emergencies. But nevertheless, we respect the fact that, problems can build up. If there are debts that are mounting, or there's staff that you want to keep on working at your business, it's very easy to be distracted by the urgency and let it drive out what's important. And this capital can be very important. And so, I think all of our teams here, you're hearing from us, and the SBDC included, by the way, is a really important partner of this. And that's not just because they're hosting today's event, but TruFund has been actively working with Andrew and his team at Pace and other SBDCs around the city to help businesses get their applications together. But I would just, encourage, considering everything Casey just said that is on our plates here, to try to get, these documents together, because once we have them, we move very, very quickly as lenders. The other thing too is that these documents, as streamlined as this process is, and if the loan is the right thing to do in terms of your cash flow and your ability to repay it, you actually come through these processes a lot better off as a business owner. I think you've learned about record keeping, you've learned about what kind of story your past financials tell about your business, and you have your records in place. And this may very well not be the last of the emergency loan assistance programs. I mean, there may be others that are coming. And so, you go through this process, you get these documents in order, it can give you access to the New York Loan Fund. It may also set you up for other things that may be coming in to help the business community. One last thing, if I may, just to say, is that the way that this program is set up is it really looks backward to 2019 and 2018 to determine whether a business or a nonprofit was viable. And that is different than another, say, traditional loan program that normally has projections that are included. Now, the New York Forward Loan Fund does not require projections. It does not ask you to show, what is currently the situation in your business, what you project the situation to be. This is a demonstration of viability based off of 2019, 2018 taxes. So if you were viable in those years and you're in operation right now, and you can describe to us and we can understand how COVID impacted your business, you can itemize what this loan is for, then that is a way that we can move forward with you with this program. So I just want to emphasize that for anyone who's concerned about what kind of projections they might need to submit.
I think that's a really valuable point, Brian, and I guess I appreciate your referencing kind of the work that the SBDCs can do. What I'd like to kind of make sure I bring out here as well is, I mean, this is a valuable program. It's time specific, and it's obviously kind of coordinated and organized around COVID-19 recovery. But participants are fortunate in that there are 5 dynamic and very solid community-based financial groups that are participating in this program. So these really can be opportunities for you as borrowers to kind of start generating new kind of lending relationships with them. So it may be kind of a more specific need that you need right now, but long term there may be opportunities through, let's say the Small Business Administration's 7A program, where there are kind of longer term growth opportunities, or 4 program where you may be able to purchase some facilities. So I appreciate kind of Brian referencing that, because these are lenders that you're going to want to kind of develop relationships with. The second thing that I'll kind of reinforce is that, the record keeping piece of it, and being able to kind of understand what's involved. I mean, you're going to find the SBDC advisors from throughout the state are well positioned and kind of understand the process, understand the documents required. So given how busy Casey and Brian and their colleagues are, you're going to want to make sure that you get them a complete package so you can get a quick turnaround. So we'd really encourage you to take advantage of the services that our center and our colleagues throughout the state have available. It's all offered at no cost to you, so we really can kind of help you position yourselves for a quicker response and streamlined processing. I did have one question further about kind of credit pulls, but Renee, I don't know if you have questions in the chat. I guess I can kind of hold off on that one if you have others, because folks have been patient. I want to make sure that we do get to questions, and people want to stick around shortly after the hour. I'm happy to do so.
Andrew, this is one that you've touched on a little bit, but just to clarify and let folks know, for folks that don't qualify for this program specifically, who have gotten PPP or EIDL loans, what are their options and who should they contact to talk about those?
There are a wide range of financial programs that are in place. While New York Forward is terrific, it's clearly not suited for everybody, nor is there financing available for every small business and landlord in need. So there are a range of programs through the federal government. There are also a number of low interest loan programs and grant programs available from community-based lenders, as well as the private sector. I did put in the chat a website link to location where we're trying to keep track of all of those resources. I think your best bet is really to kind of work one-on-one with the business advisor to get a sense of where you are right now, what your needs are specifically, so we can kind of help cull through that and figure out what might be a good fit for you. So as a starting point, I guess I would say check out that web link there. Renee, if you wouldn't mind kind of relinking that, or I can find it again as well. And then connect with an advisor, and then we kind of walk you.
Absolutely, and I'll go ahead and I'll put in the PACE information, and if you're outside of the PACE area, we have 22 centers throughout New York State, so you'll be able to connect with one close to you. If your business used personal funding, personal loans to operate in 2019, so they had a negative bottom line, also because of 2019, they had having a bad year, they have a low credit score, are they still eligible?
Well, we would have to learn more about what you meant by the personal loans. If the business, if an individual borrowed from the business, we would just need more detail about that. I can't say how that might result in an underwriting, but that would obviously be a factor we would look at. We don't just take the net income at the in the taxes and just run from that. We learn how what were the revenues, what were the expenses. We account for those things, I think, as appropriate and responsibly as possible. But it's not just looking at the net income and that's it. We go deeper into that. With respect to a year, though, that let's say that the business in 2019, its operating revenues minus actual operating expenses did end up in a loss, then that probably will not go through that loan. Of course, we would have to examine if there are any costs that really should be backed out of that assessment, but if that's the case, that's probably not going to work because the business was not viable prior to March of 2020. Lastly, around credit. So yes, credit scores are part of this. Credit is a part of this. The personal credit of the business owner is a part of the analysis. Now, for TruFund, and I think for other lenders as well, Well, at least for TruFund, other lenders are going to be in a similar range. Casey, you may be able to share a CPC, but for TruFund, the minimum score is 600. Now, the thing is that we are months into this pandemic, so there may be very recent damage that had happened to a credit report in terms of recent latenesses, and we will look into that and we will see what kind of consideration could be made. So there may be scores lower than 600 that we're able to fund when we understand a little bit more about why that score is what it is. But generally speaking, 600 is our minimum.
Reiterating what Brian said, the only difference at CPC would be that I think our lowest kind of stated credit score is 625. The caveat there is many properties are owned by more than one individual, so we would most likely average the credit score between all the owners of the property or the LLC. So that could allow some flexibility.
Okay, and there was a follow-up when you were saying that from Randall, if 600 is the minimum, could you get a cosigner?
That I don't think we have a policy for on this program, if I'm not mistaken. This is to the business, this is to the business owner. So while cosigners are very much a part of, could be very much a part of a traditional loan, this is a loan especially designed for the emergency circumstance that we're in. It's really meant to engage business owners and their businesses. So I will say that I do not believe so. I have not had a case like that, but I don't know if Beverly or Casey have anything definitive on that, but that's not the practice that we are engaging in for this product.
Great.
I would concur, Brian.
Thank you. Would getting a New York Forward loan make a business owner ineligible for a first-time PPP loan if or when the PPP reopens?
No, there's no relationship with getting a getting a New York Forward loan and how that would affect the PPP.
I think the thing to kind of make sure you keep in mind is, I would agree with Brian, just being sure that whatever you're getting financing for, you're not looking for financing for the same item from multiple sources, at least from the small business side of things. So it's an interesting question. Our hope is that there will be more PPP funds available at some point. Clearly, as many or most of you on the call may know, that program has sunset, but we're hoping for additional allocations from the federal side. But just as a good kind of rule of thumb, just make sure that whatever you're securing financing for, that you have good bookkeeping, as Brian had touched on, and that you're also ensuring that it's not funding something you've already secured some sort of allocation for elsewhere.
Good point.
Thank you. A quick one from Joyce. Does a CPC loan include property managers and developers?
So yes to developers, in as much as they have an existing property. So as I believe Beverly already said, these loans are not for acquiring new acquisitions of real estate. These are for existing buildings that have existing tenants. And property managers, that's an interesting one. But again, you have to own the building. You have to be the owner of the building as opposed to a property manager who is servicing a building. Now, if you happen to be the owner that has a property management company, kind of all wrapped in one, that could potentially be eligible, and you would just apply underneath the ownership structure as opposed to the property manager structure.
Was it made clear why the loan excluded businesses that received more than the 50K PPP?
Yeah, so I think we wanted to make sure that we were getting the businesses that really need the money. You know, there were a handful of businesses that only received a small amount of PPP, and they indicated that they could only use this for, of course, 75% of that money needs to be used towards payroll, but they have much larger expenses. So it didn't really put a dent in their need. So that's why we capped the PPP amount to $50,000, just based on the feedback we've received from the businesses, the smaller businesses that really needed the money. If we receive data from businesses indicating that, well, they've received $75,000 and they still need it, we can definitely take a look at it again and reassess that projection. But for now, we're at the 50,000 cap.
If I may add to that point too, is that we all know that for all of its intention and how helpful it was to many businesses, there were still significant limitations in who the PPP could serve and the EIDL, and still so many communities were left out of accessing that capital. So there was a priority in the New York Loan Fund to get the businesses that just were never able to access federal assistance to begin with. And I think making this program ever more effective is all the community outreach that has been done across the state. So many webinars like this, and partnership with all kinds of local organizations that are a part of the small business ecosystem, I think is something very distinguishing about this, to try to get to those communities who were not able to access the federal assistance.
The applicable interest fixed, simple, or compound, are there any or origination fees, any strings attached to prepayment? I think you covered some of these, but if you could go through that quickly.
For small businesses and nonprofits, there's no application fee, no closing fee.
Yeah, it would be the same on the small landlord side as well.
And there was no penalty for prepayment, correct?
No penalty for prepayment.
Correct.
That's correct as well. Mm-hmm.
All that to say, though, I guess if you are a business and you have 2% or 3% interest funding, if you're considering looking for alternate financing at some future juncture, and plus a year's worth of interest-only payments, I mean, this is these are very valuable terms, and it's important to kind of recognize having access to that working capital. So while there are no prepayment penalties, kind of having access to low-cost funding, for your business, I think is something you may want to make sure that you consider before kind of repaying that.
We had some questions come in about how much money might be left in the fund and applicants and so forth. Is there a good resource online that folks could look to for kind of an updated number on where the fund is at?
I have an overall ballpark figure of where we are with the funds. I know there at some point in time there was some miscommunication that the fund was overcommitted. That is definitely not the case. We do have funding available for businesses to partake in the program. I think as of last week, this number definitely has changed based on what Brian said. He closed on a loan on Friday. We've reported, I think, over $21 million has been funded to businesses across the state, and that number increases, as I said, on a daily basis.
I think you mentioned a percentage that would go to the women and minority-owned businesses. What was that breakdown?
Yeah, so that was 60% of the loans would be going to minority businesses. Based on that dollar amount that I just referenced earlier, 70% of that has gone to minority and women-owned businesses. So we've definitely exceeded our goal.
Maureen asked if it's a seasonal business, which 3 months should they use to calculate their New York Forward loan?
Well, then we would look at those 3 months, or the 3 months that align best to the season, where you have a lot more activity. That's part of the advantage of this, is that we can move whichever 3 months that we're looking at to one that can hopefully give you the most capital possible. And we'd be looking at 2019. And of course, if we're going to look at a 3-month period too, it would be helpful to see the financial statements, any monthly income statement that you have prepared, so that we could really understand and see that seasonality. Because the tax returns will just show, obviously, the year's sum.
PJ had a question. I think you might have answered a few of these, but I'll read the whole thing. For pre-application, is there a hard inquiry on the credit report? If so, will the load be written in the business name or personally to the officers of the registered business entity? He saw the numbers between 2 and 3%. Can one expect the loan to be granted at 2% if it checks all the correct boxes?
Okay, so the first question was around the pre-application and the credit. So when you're preparing a pre-application, we're just asking you to identify what your credit score is. There is when your credit score isn't being run until you're paired with a lender and you're entering into the underwriting process. So there is no hard inquiry at that point in time. The next question was around interest rate. So I know I mentioned there was a 3% interest rate. That is for small businesses and landlords. The 2% only applies to nonprofits. So if this individual is a small business, he or she will have that 3% interest rate. If this individual is a nonprofit, then they'll take advantage of that 2%.
Alexis sent us a question. I might need to ask her a few follow-ups, but I'll run it by you first. She owns a small retail office building in a target area and wanted to know if CPC could help.
This is a part that we've kind of struggled with from the perspective of New York Forward was specifically designed to assist residential landlords. And, I've had some hard conversations with commercial landlords, retail landlords, and saying, if you could get your tenant, your commercial retail tenant to apply for a New York Forward loan on the business side, I think that would be helpful to you. But from the way the program was designed, from a landlord perspective, we are looking at small residential landlords exclusively.
Thank you. And I think I pulled up the right slide. Is that the one that you went over this, Beverly?
Right. So I think was the question around the type of business that can apply or the amount that they can apply for?
Type
Retail,
of business,
office.
sorry.
Oh, okay. Yeah. So it's a retail business. So if they employ 20 or fewer, the business is located in New York. Their annual revenue does not exceed $3 million. They should be able to apply. I know there are a handful of businesses that are not eligible, and I don't think retail does not fall under that bucket. Will
the loan be written in the business name or personally to the officers?
Yeah, is that for a nonprofit?
PJ, if you could let me know if that's a nonprofit. Samar wanted to double check if solopreneurs were eligible.
I'll answer that to say right away, yes. Solopreneurs, in other words, an entrepreneur that does not have any employees, yes.
Thank you. And PJ said no, not a nonprofit.
Okay. Yeah, so it's a business loan, but it will be personally guaranteed. So that's part of what the credit check is for, and so that's important to know. Let me also just mention too that in the case of a nonprofit, you know that you'll have an executive officer who has been authorized by the board of directors to sign, or actually to apply and sign on behalf of the nonprofit.
Patrice said, thank you for all the great information. I'm almost sure I'm not eligible for funding in my case, but I figured I would explain so you guys could confirm that. I have a single member LLC formed in January of 2019 in conjunction with me starting a career as a real estate agent. Although I had some prospects pre-COVID, I never closed a deal. So my major obstacle is I have no income from my LLC and have not paid taxes as of yet. I did receive $1,000 for the EIDL grant and was denied for the loan. I know it's a stretch, but I would appreciate any feedback.
Simply because that pertains to a business, I'll just answer that unfortunately, because of the lack of revenue in 2019 and the ability to demonstrate viability of the business, that just would not qualify. I would just encourage a business owner to continue to look for resources. Obviously, the EIDL was able to provide an advance based off of just the number of employees of the business, but that would not qualify. The other thing I'll quickly add too is that, and it's just to remind what Beverly had shared in her first few slides, is that a business needs to have been 1 year in operation, not just established, but 1 year in operation in order to be eligible.
And I think to this, as an aside, while financing would be helpful, I think to this individual and or others on the call who may not have had, either been profitable or have been generating revenue yet where this program may not be relevant, I would, again, sort of reinforce recommending connecting with one of your local small business development centers, because there may be, untapped marketing strategies, maybe building out or expanding or improving your website or social media presence, or thinking about other opportunities to be able to, look at sales and procurement opportunities that will help get you on the right track. So outside of this program, there may be kind of a wide range of activities that a business advisor can help you with in terms of kind of getting you to a point, if not through this program. These and other community lenders are, working very actively in New York State community to serve kind of new and kind of emerging small businesses. So work with an advisor and kind of get on their pipeline, I think follow.
Derek's a small landlord that owns rental property, but the property he bought came with back taxes that he's been slowly paying off. Will he qualify?
I believe without understanding the full, application per se, it would not, there isn't anything that in that information that would disqualify.
Thank you. We had another follow-up on what the qualification requirements are. Is there a good slide, Beverly, for me to jump to?
So is this a business or a nonprofit?
Nonprofit.
In terms of the eligibility from a nonprofit standpoint, I would say that they have to be organized as a 501c3 or a faith-based organization, have to employ 20 or fewer full-time employees, provide direct service to New Yorkers, have an annual operating budget of less than $3 million, and of course have suffered direct economic hardship as a result of COVID-19. And you have to be located in New York, and you have to be in operation for at least 1 year.
And you don't have to have a business plan. I think Casey do cover that one. Is that correct?
That is correct for the small landlords.
As well as for nonprofits and the small businesses too. They do not need a business plan.
Andrew, I'll turn things back over to you while I read through quick to make sure I didn't miss any questions.
Great. Well, Renee, first off, I really appreciate you managing and moderating and running the behind the scenes arrangements. So thanks as always for your partnership. Beverly, Brian, and Casey, I really appreciate all of your insights in terms of the program. I think the New York Forward Loan Fund's been an extraordinarily impactful program to a number of our clients, and I think to a lot of small businesses and landlords throughout the state. And look forward to its continued growth. We really appreciate you taking the time to learn more about the program, and hopefully it can help you build and grow and kind of sustain post-COVID here in New York State. So thanks, everybody. Really appreciate it.